What's up, traders, and welcome back to Explain the Charts. Today, on October 8th, 2025, we're diving deep into one of the most watched stocks in the world, Apple, ticker symbol Apple. We've got a lot to cover, from the latest news surrounding the iPhone 17 launch and analyst ratings to a full technical breakdown of the charts. Is Apple setting up for a massive breakout to new highs, or is a pullback on the horizon? We'll analyze the key levels, discuss the bullish and bearish cases, and give you the essential data points you need to watch. So, let's get right into the news. First, let's look at the current sentiment surrounding Apple, which is overwhelmingly positive, largely driven by the recent launch of the iPhone 17. News outlets like Investors Business Daily and CNBC reported a surge in the stock price following the launch in mid to late September, with the stock finally turning positive for the year. Analysts noted that early demand indications are solid, especially for the Premium Pro models, and ship times are significantly longer than last year's models, suggesting robust sales. This positive momentum led JPMorgan to reiterate a buy rating and raise their price target to an impressive $280. They're not only bullish on the iPhone 17 cycle, but are also looking ahead to a potential foldable iPhone in 2026, which they believe will significantly boost future revenue. However, it's not all sunshine and roses. There are lingering concerns about Apple's AI strategy, with some analysts feeling they are lagging behind competitors like Microsoft and Google. A key AI researcher recently left for Meta, adding fuel to the fire about talent retention challenges. Furthermore, just a few days ago, Jefferies actually downgraded the stock, citing what they believe are unrealistic expectations for the new iPhone upgrade cycle. So we have a classic battleground scenario: incredible current sales momentum versus long-term strategic questions and high expectations. Now, let's see how this narrative is reflected in the charts. Starting with the daily chart for the big picture, we can see a very strong uptrend in place for most of 2025. After a significant dip in early April, the stock has been on an absolute tear, rallying from a low of around $169 to a recent all-time high of $260.10. This all-time high was hit on September 26th, perfectly aligning with the peak hype from the iPhone 17 sales data coming in. That $260 level is now the most critical resistance level to watch. It's the price ceiling the bulls need to break. On the support side, we have multiple layers. The most immediate support zone is around the $255 level, which has been tested in the last couple of sessions. Below that, the $235 area, which was a point of resistance back in July and August, should now act as a solid support level. And of course, the major long-term support remains that April low near $169. Let's zoom in on that dramatic period in early April because it tells us a lot about the character of this stock. You can see a sharp, multi-day sell-off culminating in a low of $169.21 on April 8th. But look what happened the very next day on April 9th. The stock exploded upwards by over 15% in a single session on massive volume, completely reversing the bearish sentiment. This is what we call a V-shaped recovery, and it signaled that institutional buyers were aggressively stepping in at those lower prices, viewing the dip as a major buying opportunity. That event established a powerful psychological floor for the stock for the rest of the year. Now let's fast forward and focus on the most recent price action from September to today. Here you can see the powerful rally leading into the iPhone 17 launch, which took the price from around $226 all the way up to that $260 peak. This was a classic by the news event, as positive sales reports fueled the momentum. Since hitting that all-time high, however, the price has entered a period of consolidation. We're seeing lower highs and are currently trading around $256, hovering just below that key resistance. The volume has also tapered off a bit, which is typical during a consolidation phase. The big question now is whether this is a healthy pause before the next leg up, or if the stock is losing momentum. To get a better sense of the short-term battle, let's switch to the 1-hour chart. Over the past few days, you can see the price has been trading in a relatively tight range, roughly between $255 and $258. This confirms the consolidation we saw on the daily chart. The bulls are defending the $255 level, while the bears are preventing a breakout above the $258 area. A decisive break outside of this range on the hourly chart will likely signal the next short-term move. Breaking below $255 could see a quick drop to the next support level, while a move above $258 would put the $260 all-time high back in play. Drilling down even further to the 15-minute chart, we can see the intraday chop very clearly. The price action over the last 24 hours has been very sideways with no clear trend. This is not a chart for swing traders right now. It's a scalper's market, trading bounces between minor support and resistance. The lack of immediate follow-through in either direction suggests the market is waiting for a new catalyst before making a significant commitment. All right, let's switch back to the daily chart and put it all together. To recap, the key price levels are absolutely critical right now. Major resistance is the all-time high at $260.10. Short-term support is at the recent low around $255. Intermediate support zones are found near $235 and then down to $220. So, what's the outlook? The bullish scenario, which I would give a 65% probability, is that this consolidation is a bullish flag or pennant forming. Fueled by strong iPhone sales and positive analyst sentiment, the stock could gather enough strength to break through the $260.10 resistance. A convincing close above this level, especially on higher-than-average volume, would be the trigger. If that happens, the next logical target would be the JPMorgan price target of $280. The bearish scenario, with about a 35% probability, is that the good news is already priced in. If the stock fails to break $260 and instead breaks down below the $255 support level, it could signal a deeper correction. This would be reinforced by any negative news regarding sales numbers or a broader market downturn. In this case, a retest of the $235 to $240 support zone would be highly likely. What should you watch for? Keep a close eye on that $255 to $260 range. The breakout direction from this range will likely dictate the trend for the next several weeks. Also, pay attention to the upcoming quarterly earnings report, as that will provide concrete data to either confirm or deny the strong sales narrative. And that's our in-depth look at Apple. Remember, this video is for informational and educational purposes only. It is not financial advice, and you should always do your own research and consult with a professional before making any investment decisions. Trading involves risk, and you should never risk more than you are prepared to lose.